In this video, we're going to go over a strategy that you can use to take exceptionally profitable trades using the concept of liquidity sweeps. This strategy is going to use only 2 free Tradingview indicators. To add these amazing indicators to our chart, you're going to go to Tradingview, which is a trading platform that I normally use. If you need to sign up, the link for that will be in the video description. Next, you want to load the 15-minute time frame of CAD-JPY, but you're not going to be limited to this because this strategy is actually going to work on any trading security as long as the time frame is between 1 minute to 4 hours. After that, you want to click on Indicators and type in the first indicator, which is actually the main indicator of our strategy, and it's called Liquidity Sweeps. This one by LuxAlgo. The second indicator that we need to add is a super awesome trend indicator called 7EMA_5MA. This one by Storewise. Next, double-click on one of these moving averages so we can change the settings. On the Inputs tab, you want to change the EMA1 length to 8, EMA2 length to 13, EMA3 to 21, and EMA4 to 34. Then head over to the Style tab so we can change the colors. For EMA1, we're going to change its color to green with a 100% opacity. EMA2 is going to be blue. Increase the opacity. EMA3 is going to be orange. Increase the opacity. And lastly, EMA4 is going to be red with a 100% opacity. For the rest of these EMAs, we're going to disable them, so we're only left with the first 4 EMAs. After that, click OK. For the liquidity sweeps indicator, we don't need to change anything. The default settings are going to work fine. The liquidity sweeps indicator by LuxAlgo is designed to detect and visualize liquidity sweeps in the market, which can assist traders in identifying potential support and resistance zones, as well as entry and exit points for their positions. Now, at this point in time, I know you may be thinking,
but what exactly is liquidity, and what is a liquidity sweep?
Well, I'm going to tell you, but before we do that, let's first of all go over this indicator's components. As you can see, it's made up of lines and rectangles. This is a line, and this is a rectangle. Lines represent liquidity. Rectangles represent liquidity sweeps. Red lines like this indicate buy-side liquidity. And then green lines like this, or actually this color is teal. So teal lines like this indicate sell-side liquidity. Once a sell-side liquidity has been taken out by the price, or I should say, once the sell-side liquidity has been swept, a teal-colored rectangle like this is going to be printed. This indicates a sell-side liquidity sweep. Conversely, once the buy-side liquidity has been swept by the price, a red rectangle is going to be printed. This indicates a buy-side liquidity sweep. Now, back to our original question, which is what is liquidity? Liquidity, in the context of trading, refers to areas where it's believed retail traders have placed their stop orders. This includes both buy and sell stop orders. A buy-side liquidity area is where multiple buy stop orders are presumed to be placed by retail traders. For instance, if there's a swing high, the indicator might mark this point with a red line, signaling buy-side liquidity. Traders expect the price to rise once it breaks above this level, although this doesn't always occur. Often, the price might breach a swing high only to perform a fake out and retreat, a phenomenon known as a liquidity sweep. For a sweep to be deemed valid, it typically occurs swiftly within a single candlestick and is marked by a single wick. Conversely, sell-side liquidity is essentially the opposite. It represents an area where traders are believed to have placed multiple sell-stop orders, anticipating that the price will drop once it falls below this level. This strategic placement is based on the expectation of downward price movement following the breach, much like the scenario described for buy-side liquidity. In exploring the settings of this indicator, we can adjust various parameters, such as the swings. The number you input here dictates the minimum number of candles that must pass before a liquidity level is considered to be swept. For example, if a liquidity level is swept just 3 candles after being established, this would be deemed invalid, and the indicator will not mark that sweep. Then here, there's an only wicks option, which requires that a liquidity sweep occurs solely with a wick once a liquidity level has been set. Then this setting allows for a break and retest of a liquidity level before labeling it as a sweep. The third option tracks liquidity sweeps at two specific instances: the initial touch, where the price reaches the level with a wick, and a subsequent instance, where the price breaks beyond a liquidity level and then retests it, offering a second chance to act if a sweep occurs during that retest. Furthermore, there is an option to extend these lines and boxes to visualize the duration of liquidity levels. In the Inputs tab, the choices are more straightforward, with options to disable either the boxes or lines, providing simplicity in customization. At this point in time, I know you may be thinking, but how can we actually use this indicator to trade? Well, I'm going to tell you, but before that, let's talk about the Forex broker called HankoTrade. Now, I've been using HankoTrade for quite some time. As you can see here, this is my live account on HankoTrade's web trader platform. The reason why I think HankoTrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, HankoTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,484.50, well, they're going to give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus, as well as all the other perks, well, sign up to HankoTrade using the link in the video description. Now back to the video. Using this indicator to trade is really simple. For a long trade, you identify a sell-side liquidity sweep that is going to look something like this. After you have it, you take your long position. For a short position, you identify a buy-side liquidity sweep, and that is going to look exactly like this. After we have that, we take a short position. However, in order to make the most out of this indicator, we need to take our positions following the direction of the overall trend of the market. And we're going to be using these EMAs to identify the trend. Whenever these EMAs are lined up like this is a bullish trend, and we're only going to be looking to take long positions. For short positions, we need these EMAs to be lined up like this. To take a long trade with these two indicators, these are the conditions. First, identify a sell-side liquidity sweep. Right here we can see this is our sell-side liquidity level, and this is the sweep, which makes this sweep candle our entry candle. Condition number 2 is to confirm that the market is in a bullish trend. For that, we're going to mark our chart from one candle before this swing low, all the way past the entry candle. For a bullish trend, we need these EMAs to be aligned to a bullish trend like they are here, and to not touch one another, at least inside this window. So not only should they be aligned like this, with the red up at the top, then yellow, blue, and green, but none of them should touch any of the other EMAs. This would indicate a bullish trend. Because of that, we're going to enter a long position here. We're going to put our stop loss under the most recent swing low. For the take profit, we're going to go with 1.5 times the risk, letting the trade run and take profit. To take a short position, we're going to do the opposite. So first, we identify a buy-side liquidity sweep. For that, we're going to be using the LuxAlgo Liquidity Sweeps Indicator. This thin red line represents a buy-side liquidity level. If I hide the indicator itself, you can see that this wick is really huge and goes beyond this level. This is a liquidity sweep, specifically a buy-side liquidity sweep, which is going to give us an opportunity to take a short position. But before we take the position, we need to ensure that the market is in a bearish trend. That is where we're going to be using these 4 EMAs. You basically mark your chart starting from one candle before this liquidity swing, all the way to here. So we need these 4 EMAs to be aligned to a bearish trend like they are here. And none of them should touch any of the other EMAs, at least inside this window. If, for example, this red EMA were to go up slightly and touch the yellow EMA, then that is no longer going to be considered a bearish trend, and this entry would have to be skipped. But of course, that wasn't the case here. So we have a bearish trend, and we have a liquidity sweep. This is our entry candle. We take a short position here. Our stop loss is going to go above this entry candle. The take profit is going to be 1.5 times the risk. We let this trade run and take profit. In summary, this trading strategy utilizes liquidity sweeps and EMAs to identify optimal entry points for long and short positions, ensuring trades are aligned with the overall market trend for better risk management and potential profitability. If you're interested in the Liquidity Sweeps Indicator, you can find it on TradingView. That covers everything for this video. I hope you found it valuable. If you did, please hit the like button below and consider subscribing to stay updated. Thanks for watching, and I'll see you next time.